Hi everyone, it's Jitan from TradersTV. In the last episode, we talked about reward to risk and how you can actually lose more trades than you win and still make a return. Absolutely a key weapon of many institutional fund managers. In today's video, we're actually going to be looking at compound interest. Again, one of the key tools used by Warren Buffett himself. We're also going to be looking at what kind of returns are realistic from trading. So let's get to it. So, compounding and realistic trading returns. Let's start off with compounding first of all. Compounding is by far one of the most important investment tools traders and investors have at their disposal. In fact, it was the primary reason of Warren Buffett's huge success. Okay, he is the forefather of compound returns. So what is compounding? Well, basically compounding just basically means your money or your profits make you money. Okay, where you compound your returns to keep on growing that. And the best way to understand this is of course by looking at some numbers and some figures. So here we have a journal that we use a lot on the trading floor as we sit down with people on a one-to-one basis and help them through their kind of trading plans. Okay. Now we're just going to be talking hypothetical figures today. Some of you will be starting with more capital, some of you will be starting with less capital, some of you will be able to make a higher return, some of you will make a lesser return. But the key thing is, just for illustration purposes, we're going to run these numbers and you're going to start to see the power of compounding and start to get an idea about what realistic trading returns are. So if we look at this Excel sheet here, we can actually see if we started off with just like £10,000 in a trading account, $10,000, let's say a profit per month. Keeping it very conservative, let's start it at 2%. Okay, so at 2% profit per month, basically on the first month, your return will be £200. Okay, so we'll just go for a British pound base account, let's say £10,000. So if you make 2% profit in a month, that means you're going to make £200 return. That means your portfolio value is now £10,200 because you've got that extra £200 profit. And basically all compound return means that your next month's return, you're starting with £10,200. Okay, so now your return over the 2% profit is on the £10,200. So actually your return now is £204. Whereas before you only just made £200. The next month you made £204. Then your total port value goes up to £10,404. The combination of this month's profit, the £204, and last month's profit, the £200. Then on the third month, that means you're starting off your trading account, okay, with £10,404. Because you're starting off a higher amount, using your profits to compound your returns, then you can start to see that your monthly returns, start to get a little bit larger, even though your profit is actually the same at 2% per month. And this is what compound return means. Now, this is really important to understand because too often we find a lot of traders, we speak to them on a one-to-one basis, and a lot of people come onto the trading floor and say, okay, well, you know, I've got starting with, let's say, £2,000 in their trading account, fine, but they're going for a 40% return per month because they've seen someone else say they can do that or promise those kind of returns. Okay, so starting off with £2,000 on your trading account and achieving a profit of 40% per month, okay, if you compounded that, then within the next 5 years, you're actually going to be just shy of £2 trillion. You heard me correct. In just 5 years' time, you're going to be close to £2 trillion. Right? Now, does that sound realistic? You're going to be worth more than most of the countries in the world combined together. Okay? In fact, the FX market trades around $5 to $6 trillion per day. So in effect, after 6 or 7 years, you're probably going to be the only player in the global foreign exchange market, right? Alarm bells should be ringing here, okay? 2,000 here, and we see this all the time. People want to come in, 40% a month. That's their aim, and actually in 5 years they're going to be a trillionaire. Okay, now a lot of people go into the market not understanding what their end game is going to be, and straight away they set themselves up for failure. You have to know what your outcome is, what is your end game going to be, and then work your way backwards. Too often people just come in and they start trading with very unrealistic returns, okay, and not realizing that actually if they just simplified their process, they would be more consistent with their trading, yeah, and it's going to be much more long term. Okay, so that's just an important one to understand. And I know many of you will be actually thinking, well, that was my plan, Jitan. Okay, that's what I was going to do. And great, yeah, if you're going to be a trillionaire in 5 years' time, fantastic. However, I think most of us nowadays, we're just looking for that consistent return, okay? Consistent return, just to help out with our daily lives, okay? Maybe it's going to be just to help out with some income, maybe it's going to be for capital growth. We're all trading for different reasons, okay? But it's very important we start with realistic returns so we're not shooting ourselves in the foot before we even begin our trading journey. Now, if we look at this sheet here, what you'll actually notice is if we just change these numbers, and let's say we went back down to, let's say, 2% on a 10k account, okay? Now, you know, in 5 years' time, okay, you can see that the portfolio value in about 5 years' time is about 32,000. Now, for a lot of people, they'll be like, wow, fantastic, okay, that is something that I definitely want to get involved in, because you're not going to be able to grow your savings in your bank account to that kind of return. Right? So for a lot of people, that's great. For other people, it's like, well, actually, you know, I'm looking for a little bit more. But the key thing is this: you don't need to have such crazy, unrealistic returns, okay, where you're always going to get frustrated that you're never making enough. Because actually, if you look at this example here, at 2% per month, you've made 32k, okay, after 5 years' time. Now, what happens, or what do you think will happen if we change this number to just 4%? So just another couple of percent per month, okay? Nowhere near the 40% we've been talking about, okay, or a lot of people talk about. Let's say we just able to make a couple more percent a month and we turn it to 4% per month, starting with the same amount of 10,000. What do you think the portfolio value would be after 5 years? Well, let's have a look. So if I put 4% in here, that portfolio value now is 105,000. Now things start to get a little bit more interesting. I'm sure a lot of people would want to be having somewhere close to this in 5 years' time. There's not many people that would say no to that. And again, not crazy, unrealistic returns here, okay, making it a lot more achievable, but you just see the power of the compound return. And compound return is a great tool that traders and investors must use to your advantage, okay, because it's free, okay, it's free at the end of the day as well, using the compound return. But you just got to have the right strategy, you've got to have the right processes in place to allow you to be as consistent as possible, and that is very important. I hope you enjoyed that video. Make sure you say subscribe to our YouTube channel, because next episode is going to be really exciting. We're going to be discussing how you can profit from the current Brexit volatility and the key changes that are happening right now, and how we can see them on the chart and position ourselves accordingly. So make sure you stay tuned. If you have any questions, feel free to leave a comment below. But if you would like to interact live with one of our traders, then I urge you and strongly recommend to visit the link below and attend one of our free Forex workshops. I'll see you in the next video.